the ultra-exclusive finance channel, Chaos and Capital. We are probably the most exclusive finance channel on YouTube. Seriously, we have so few views that watching this video practically makes you part of a secret society. Forget hedge funds. This is ultra-exclusive financial content, available only to a select few by accident. But hey, if you're here, congratulations, you're in the inner circle. So do your part, like, subscribe, and keep this hidden gem going before the algorithm realizes we're actually kind of awesome. Alright, now let's dive into today's news because Gerald, our chief mascot officer, is already doing laps in his tank, and that usually means something interesting is going on. Remember, this is not financial advice, just a conversation between you, me, and our fish overlord. First up, ASML Holding NV, which sounds like a secret government agency, but is actually a Dutch company that makes the fancy machines that print advanced microchips. If AI is the brain, ASML is the guy building the brain factory. In Q4 of 2024, they raked in a jaw-dropping 9.3 billion euros, crushing expectations like a whale belly-flopping on a dinghy. Their gross margin, a solid 51.7%, and net income, 2.7 billion euros. That's a lot of euros, my friends. For the full year, they clocked 28.4 billion euros in sales and 7.6 billion euros in profit. Their CEO, Christophe Fouquet, basically said, AI is completely reshaping the chip market, but not all our clients are riding the wave equally, which is CEO speak for some people are making it rain and others are crying in the corner. Looking ahead, ASML expects 2025 sales to land between 30 and 35 billion euros, keeping their gross margin around 51%-53%. So what does that mean for you? Well, if you're holding ASML stock, you're probably smiling. If you're in the AI chip business and not keeping up, well, let's just say Gerald's goldfish memory might outlast your company. Now let's take a quick dip into the broader tech sector because stocks are rebounding after a recent slump. Investors are frothing at the mouth over upcoming earnings from Tesla, Microsoft, and Meta. The big question is this real, or is it just a sugar rush from short-term earnings hype? Some analysts think the rally will last, others think it's a mirage. Meanwhile, we think watching investors panic is free entertainment. But the real fireworks are coming from DeepSeek, the Chinese AI startup that's zooming past ChatGPT in the US Apple App Store. Yep, a Chinese AI app is now the top-rated free app in the US, which is setting off alarm bells louder than an unmuted Zoom call in a quiet office. DeepSeek claims its latest model, DeepSeek V3, required just 2,000 NVIDIA GPUs for training. That's shockingly low, like saying you built a spaceship out of Lego bricks and optimism. Most big AI models require 16,000 GPUs or more. So either DeepSeek has cracked some mind-blowing efficiency, or they might have found some creative shortcuts. And guess what? Microsoft and OpenAI are already investigating whether DeepSeek accidentally borrowed some of OpenAI's tech. It's all very cloak and dagger. Meanwhile, US officials are sweating over whether this app is hoovering up American user data. If this starts looking like TikTok 2.0, we could see some regulatory drama faster than you can say data privacy. Even President Trump and the UK Prime Minister are weighing in, saying the West needs to double down on AI innovation or risk getting lapped. So yeah, DeepSeek's rise is either a miracle of efficiency or a cybersecurity nightmare, possibly both. We'll be watching closely, mainly because Gerald has a hunch something fishy is going on. Meanwhile, over in the luxury world, LVMH, the company behind Louis Vuitton, Moet, and basically everything rich people wear and drink, just reported a decline in sales. And if LVMH is struggling, that's like seeing a yacht factory go out of business. It shouldn't happen, yet here we are. This drop suggests US consumers are tightening their wallets, which could be a bad omen for the luxury market. Or more likely, the ultra-rich are just temporarily distracted buying AI-powered yachts, and will go back to buying €5,000 handbags soon enough. Either way, LVMH dip is worth keeping an eye on. And finally, we have the wildcard factor: US economic policies and interest rates. Donald Trump's economic plans are being analyzed like a suspicious-looking sushi roll, and the Federal Reserve's next moves are still unclear. Some investors are hoping for interest rate cuts, others are preparing for market turbulence. Either way, global finance is looking more unpredictable than Gerald trying to escape his tank, which he totally did last week, and no, we still don't know how. So what have we learned today? ASML is making billions thanks to AI's insatiable hunger for chips. Tech stocks are bouncing back. Maybe? DeepSeek is either an AI revolution or a data privacy time bomb. LVMH is struggling, and that's weird. US economic policy is still a giant question mark. Basically, markets are messy, AI is shaking things up, and Gerald probably understands all of this better than us. Before you go, Gerald wants you to like and subscribe. He doesn't say it, but he does that thing where he stares at us intensely, and we just know. And look, subscribing now makes you part of the ultra-exclusive Chaos and Capital Club. Who knows? One day when we have millions of subscribers, you can tell people you were here first. Thanks for watching. Stay informed, stay entertained, and as always, stay salty, friends.